All right. Welcome to another Dude Real Estate Show. I'm here with Billy again. And today we're going to be talking about goal setting, specifically as it relates to real estate investing. But I think all these principles can be applied pretty broadly. So, Billy, how are you today?
Doing well, ready to go today.
All right, here we go. Here we go. We're going to jump into goal setting. I have no idea if you've ever set a goal in your life, but we're going to talk about it. Um, so I guess first, I'll start off with just a story, kind of like I did last time. And I think it's good to hear someone talk about how not to set a goal, maybe,
Mhm.
because
Yeah.
when me and my partner first started out buying rental properties, and we just kind of put this before we even had anything lined up. We had
Mhm.
this pie in the sky ideal that we'd have 100 units in 10 years, which is fine. That's fine to want that.
Mhm.
The problem with that is that it's really far into the future. Like 10 years is absurdly far to
Mhm.
think about something. And I think it's good to have some big longer term goals. That's fine, but I think they should be more, maybe even a little more abstract. Like I want to be financially independent in 10 years, and maybe it's through real estate or a couple different means, but it's really hard to kind of figure out, what do I need to do every day or every week or this month to get 100 units in 10 years. That's really hard to kind of work backwards to that
Yeah.
goal. Um, so what I've learned, and it's not to say that we won't get there, we probably will. I mean, we're 5 years ish in, not quite 5 years, with 28 units. So, as we get more equity in our properties and more cash flow, it certainly could happen. But that's not really that important. The number of units really honestly doesn't matter that much. It's more about what's your cash flow and your net worth, is
Mhm.
kind of the bottom line. And there's a lot of different ways to get to different places when it comes to that. So 100 units might be more than enough, or it might not be enough, depending on if you're only cash flowing $20 a door. Like that's probably not going to pay us a whole lot of money in
Mhm.
the future. But if we had, 30 doors paying us $1,000 a month, um, each, then that works out pretty well. So it
Mhm.
all depends on figuring that stuff out. But there's a lot of unknowns. You don't know what interest rates are going to be. You don't know what kind of deals you're going to find,
Mhm.
how much you're going to be leveraged,
Mhm.
stuff like that. So there's a really good book out there, and I think this is the name of it. It's called Vivid Vision,
Mhm.
and it pretty much lays out how to achieve goals, really. I mean,
Mhm.
but it really does say, don't try to plan too much too long into the future, because it's just too big, too muddled for our brains to wrap our minds around that. So what he said is, kind of look at 3 years. Most people
Mhm.
can get a grip on what 3 years might look like or could look like.
Mhm.
And then you can break that down into quarters, and then you can break those quarters down into months, weeks, and days. And you can really work backwards and figure out all the processes needed to get to certain goals.
Mhm.
So I think that's really helpful because it's a lot more concrete. And then it's more about the processes of getting to the goals instead of the goal itself. Like goals
Mhm.
are great, but at the end of the day, we don't know if we're going to hit it. We don't know if we're aiming too low or too high a lot of times. We don't know what
Mhm.
a realistic goal is or what we could get to. But when we start to set those processes in place,
Mhm.
as long as we're hitting those day-to-day things,
Mhm.
that's what matters the most, because we're taking one step after another and we're moving toward something in the future. And so one example I think is just to, like you were talking about a couple sessions ago, you said you were analyzing a lot of deals every week, spending 2 to 4 hours analyzing deals. That
Mhm.
could be one of the things that, certainly a new investor should be doing, because you should be analyzing a certain number of deals, especially as you're leading up to figuring out what you're going to buy. That way,
Mhm.
when a good deal does come across your desk, you'll know it right away because you've analyzed 1,000 bad deals.
Mhm.
Um, but that's really a process goal because you start to get better at something. And then the next step might be, okay, I don't know anything about how I'm going to finance the property. So your goal might be to speak with, half a dozen lenders. So what can you do today? Well, you can call one lender,
Yeah.
and then tomorrow you can call another one, and then you kind of get to know what's going on in that side of the market. See what
Yeah.
rates are, see what kind of programs they have, see if they worked with investors before, see just who's a
Mhm.
good fit to work with, stuff like that. So really, it's more about the processes, and really the goals can shift as you see you're making progress toward some of your goals. You might say, okay, I aimed way too high over here, so let's bring it down to here. And maybe over here we aim too low, and so we need to bring it up a notch because we can hit that. So, but you'll find that out as you go through the processes. And then just kind of one last point I have before we kind of dive into some Q&A is it's
Mhm.
really important to do two things. To write down your goal,
Mhm.
whatever it is, whether it's for business, personal stuff, whatever, write it down
Mhm.
and then review it every day. If you do those two things, you're going to be, you know, way ahead of everyone else. What that does is it just kind of it refocuses you every day. I like to look at my goals every morning, and they can be personal and business and spiritual and family and all sorts of different things.
Mhm.
But make sure that those are written down. And
Mhm.
again, some of those can change over time, and they do.
Mhm.
Um, and then it kind of works in your unconscious mind, and you start to naturally work toward those things every day, even if you're not really good about, say, time blocking, which I'm not great at
Mhm.
doing, which is why I need my unconscious mind to help me get things done. If I put it in a calendar, not necessarily going to happen. But if
Yeah.
I have that every morning, that time to kind of think about that and review that, then I
Sure.
know that I have a place that I'm going to, but I need to take steps to get there. So,
Got
do you
it.
have any questions or comments regarding kind of that?
Yeah. How do you, I guess, do you write it in like a book? Do you, I know the Bigger Pockets has the intention journal. But what do you use and how do you make sure that you look at it every day?
Personally, I have it in two different places.
Mhm.
I have it written down in like a little like moleskin journal,
Mhm.
but then I also have it in my phone,
Okay.
just like in a Google Doc. So depending on where I'm at or what I'm doing, I'll have it in both places, and then I'll update them over time. And sometimes it's good to rewrite your goals too,
Yeah.
just because putting that pen to paper kind of helps to refresh instead of just like kind of skimming over
Mhm.
what you're doing. You kind of have a little more time to think about it as you're writing each
Mhm.
word down. So that's my personal process. So you could use, it could be ink and paper, it could be digital, but as long
Mhm.
as you have it written down somewhere and you're looking at it, as
Mhm.
often as you can.
Okay. Um,
So I guess you know, tell me about a goal that you've maybe met in the past and how you met that, and then talk about some of your goals for the future and how you think you're going to go about getting those.
sure. Oh, those are good questions. A recent one, a pretty recent one. I set a goal in high school, my senior year. I was a cross country runner to make it to state, and it had been a while for someone in our school to make it individually a part of cross country. And so the summer before, I spent a lot of time just running, just getting base miles. The years before, I hadn't ran anywhere near what I had done that summer before. And so I think what was successful is I put in a short period of time. I had a plan laid out that I was given to by our coach that was going to be the coach for the year, and I just followed it. And I didn't question it. I just did it, and I did it every day. And that's really what led to my success throughout the year, and then ultimately making it to state. Um, but going forward, I have a couple goals that are kind of, I'm thinking, on the side of bad goals, because one of them is to retire by 35, and that's just a general statement of like I want to be free to do whatever I want at the age 35. And then the second goal that I've set out is a little more concrete. Just have income from other sources than my W-2 job that covers my monthly expenses. I think that one makes more sense. But for both those goals, I'm not really tracking it in any way, and I'm not really reviewing it. Except when I talk to people, I typically will talk about that as a goal. It's
Sure.
very cemented in my head that that's what I want to do.
Yeah, yeah, I think those are fine. It's like it's good to have like I mean your basic goal it sounds like is just to be financially independent by your
Hmm.
mid by 35.
Hmm.
So and that's fine. I don't know how far away that is for you
Yeah.
exactly, but
Hmm.
um you can still kind of work backwards from there because there are things that you pretty much need to know. Like you can assume you're gonna if you look at the actuarial tables, whatever those
Yeah.
are,
Yeah.
you know how much you know what your life expectancy is. Um,
Hmm.
so you kind of have to figure out, okay, what do I live on? Do I get a bump in income every year?
Hmm.
How much do I need then to survive? And right
Hmm.
now, you know what that number is right now. So you
Right.
can, if you figure in inflation, you know, cost of living, that kind of thing, um, you can pretty much figure out at 35 what that's going to look like, and then how much
Hmm.
cash flow you would either need from investments or businesses or whatever
Hmm.
to fund your lifestyle and then some. So
Hmm.
it's not that hard. I think there's probably some spreadsheets out there. You could just make a basic one and be like,
Yeah.
okay, I need, you know, $3 million basically to be able to tap into. Um, and that should carry me on, or maybe it's a bigger number. I don't know. Every situation is a little bit different, but
Right.
um, so yeah, I think that's possible. But I think too, you could step back and shorten some of that stuff.
Yeah.
Like if you can figure out, okay, let's just say you need 4 million bucks at 35, you
Hmm.
are where you are now. Realistically, where do I need to be in that 3 year period then? Do I need to add one more cash flowing asset that cash flows this much a month? Can I
Hmm.
buy one or two properties in that time frame? Can I
Hmm.
get a raise at my job or a different job that pays more or gives me
Yeah.
more freedom? You know, so there's a lot of different ways to kind of look at that.
Sure. Yeah, and that's why I kind of thought those aren't super great goals because it's just so far in advance, and they're such big goals. It's hard to break them down a little bit. But like you said, anything you can break anything down. But if I focus in a shorter time frame, I should be able to have more concrete things that I can do on a daily basis that help me get to that goal.
Right. Yeah, I've heard people talk about like a freedom number, you know, and
Hmm.
that's like the number that they're going for. So I would take some time and really kind of figure that out. Like
Sure.
what's your freedom number, and then figure out a way to get there, and maybe you can get there sooner, or maybe it'll take a little more time. It depends on how quickly you can move your investments forward
Hmm.
over that time span too, but certainly it's possible. I've heard so many stories of people retiring by 30
Hmm.
even. So it, nice thing is you do have time on your side and you're
Hmm.
young, and a lot of people are jealous of that. So
Yeah. Yeah.
present
Yeah.
company included.
Yeah.
So uh, so yeah, I think yeah, just write down those goals, try to figure out something a little concrete, and then like I said, work backward from that 3 year plan. What do you need to do every quarter? Break that down into monthly, weekly, and then
Hmm.
daily goals. And it could just be literally one thing a day,
Sure.
and that makes it more manageable. Like going back to your running example, which I
Hmm.
experienced the same thing because I wanted to run a half marathon.
Hmm.
I had never done that.
Hmm.
So I just looked online and there was a running plan for like, you know, novice runner basically. And it
Hmm.
just said, okay, run this many miles on Monday, run this many miles on Tuesday. Right. So I just followed it was just easy. It's like 2.5 miles this way, this day, 4 miles that day. And you just follow it. And all of a sudden at the end of 13 weeks, you ran a marathon or a half marathon. So
Yeah.
it works. So you just got to kind of stick to it. And that's that process minded goal, and you can't beat yourself up if maybe you didn't get the time you wanted to at the
Sure.
half marathon, but you did it,
Yeah.
and you put
That's the
in the
goal.
more importantly you put in the work to
Yeah.
get there. So it's the same thing here.
Yeah. So how do you think there's a thing is too many goals on your plate, or how do you? How do you manage that?
I think that's definitely there's potential for that, but I think you
Hmm.
gotta also, as you're growing in different areas of your life, you can't leave other areas of your life behind.
Yeah.
So, I'm a big believer in personal growth as well. So I think it's important to be as healthy as possible
Mhm.
and to have your business be as healthy as possible, but also have your relationships with your significant other, your kids, your parents, whoever, those need to be healthy too. Because if you focus too much, if you go too much one way, then
Mhm.
stuff's not going to get accomplished the other way. So you might
Yeah.
even have to scale back some goals
Yeah.
in a sense. But I don't think so. I don't think too much. I think, especially if you have the mindset of getting these things done and it's kind of working in your unconscious mind, then things will play out over time the way that you kind of want them to.
Yeah. Yeah. Okay. That makes sense. And then the other question I have going off of that is what do you write down when you're writing this goal? Like, do you say, like, how do you phrase it? How do you, keep it top of mind?
Right. Yeah, I think that's a good question. Because it's important, first of all, not to use language that's too abstract.
Hmm.
Like, I'm going to be a billionaire someday. Like, that's not real helpful. So make sure that's very concrete,
Hmm.
and that essentially make it concrete enough where at the end of that sentence or paragraph or whatever it is, that you can
Hmm.
easily think of something that you could do today or this week or this month, a process, minded goal to
Yeah.
get there.
Okay.
So a lot of times I use the word commit.
Uh-huh.
So it's like I commit to, being healthy. So that's what that looks like. So it's like it could specifically be I'm going to exercise 5 days a week. It's mostly going to be running, but also some weights. And I'm going to limit my calorie intake to 1,500 calories. And I'm going to track those calories in my fitness app. So it could be
Sure.
something like that, where it's like it easily segues into kind of the process
Sure.
goals. Because if it's not, if you're not able to do that, then you probably need to rethink about how you're wording the goal.
Right.
So if we're bringing it back to real estate, if you want to buy one cash flowing property in the next 18 months,
Yeah.
that can be the goal. I commit to buying a cash flowing property in 18 months, within 18 months. And then below that, you can kind of start to work out your process goals.
Hmm.
Where you are better than I do right now, but it might be talking to that lender, or it could
Yeah.
be as simple as like, well, I need to save up another 5 grand in the next 12 months before I feel comfortable doing that. Or it
Hmm.
just might be like our conversations that we're having, like you want to have a few more of these before you have some comfort level with some of the other aspects of real estate investing
Sure.
before you get there.
Yeah. Okay. Do you think goals need to be tracked in kind of the same form that they're created, written down? Do you need to track it like needs to be written down, or can you track it in your head? What are your thoughts on that?
Yeah, I think it does need to be tracked, because if you don't measure it, it's really hard to really figure out where you're at and where you're going and if it is working.
You're right.
Um, so I think it's good to, you could either keep it on paper in a doc or a spreadsheet, something like that, whatever works best for you.
Sure.
You could have a little, on a calendar or whatever it might be. But yeah, track stuff and then go back and review. Like, okay, the last couple weeks, this is how many properties I've analyzed.
Hmm.
One looked like it could be a good deal, but I'm just not ready to pull the trigger. And you learn stuff along the way
Right.
um, when you're doing that stuff. So it makes it easier going forward.
Yeah. Yeah, I agree with that. And I think even given the example you just said, like, okay, I'm not ready to pull the trigger. Well, what about it am I not ready to pull the trigger on? It financing, is it this? And then that helps lead to like what is the next thing you actually really need to do, and not spend more time analyzing deals like I like to do.
Right. Yeah. Yeah. For you, that could be, yeah, you could probably figure out real quick, kind of like we talked about last time, like you weren't sure of like, can you get your money back in a deal? Can you pull out of a deal?
Hmm.
So we talked through that a little bit, but one of the processes might be, you talk with one of your realtor friends and you're like, hey, can I go on a home inspection with you and
Right.
see that process? And then,
Hmm.
see what happens after that process. Where
Hmm.
does the earnest money go? Um, how does the negotiation work after that time
Yeah.
frame, just to give you some peace of mind through the transaction. You might want to just shadow a realtor through an entire transaction. I mean,
Yeah.
you could do that, and just that way you can kind of put all the pieces of the puzzle together that way and give you some comfort level, at least on that side of things.
Yeah. Yeah, I 100% agree. And I think just thinking back to the goals that I've actually reached, like that process is what made it happen. So, like, figuring out what that process is for real estate and documenting it and just sticking to it, and not trying to get too emotional, I think would be a huge win for me, to get buy my first deal.
Yeah, yeah, absolutely. Yeah, I think it'll become more clear too the more we kind of chat through some of this stuff, because you'll be like, well, that does scare me, so I need to figure out why it scares me.
Yeah.
And usually we have fear about things because we don't understand them.
Yeah.
So once you understand them and you start working through some of those process goals, then it's cakewalk after that.
Yeah.
So
Then we
cool,
get
man.
the 100 units in 10 years, right?
Yeah, we'll see. I don't know. Yeah, well, that remains to be seen. But like I said, it's more about the equity built up and the cash flow and things like that. I mean, that's a fun number to say, but who knows? We might
Right.
stop it. We might stop much earlier, or we might keep going. You never know.
Right. And I think that's exactly what you said is you learn, so those goals are going to change. So it's important to do short enough goals where you have time to reassess and be like, well, actually 100 units, if they only cash flow $20 a unit, like that doesn't make sense. Why don't I get better deals that make more cash flow and go from there? So yeah, I
Yep.
think totally makes sense.
Yep, absolutely, absolutely. Yeah, and especially, and then when it's a whole nother animal when you're working with a partner, which I know you have before. To
Hmm.
Are you aligned with your goals?
Yeah.
So we'll talk a little bit about that in the next video that we're gonna do. So I think we'll wrap this one up, but we'll see you guys in the next one.